We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up TSLA. We are on a 12-month time frame. Price action, last candle to the right-hand side is a bullish green candle. Look like it's working its way up for support, or it could be denied at the top of the high. Price action is currently sitting at 191.15. We can see that price action did lose from some momentum. So if market price decides to push up with this candle or the following candle, price's action can head up to the midpoint of the second to last candle, nearing the numbers of 261.51. If price action pushes up further, it can push up to the high of that overall structure near the numbers of 351.38. And if price action reverses, come back down, it can tag that support once again before pushing up further, unless it does a complete drop down near the numbers of 124.03. Let's also pull that midpoint down a little further. So nearing the numbers of 252.86. So let's take a look at what's going on in the market. So if price action pushes up from this bullish green candle, where is it coming from? It's coming from an area consolidation, drew up a pattern down there, finally pushed up to a high. Huge bullish green candles made it to the top of that high. The second candle in the market and third to last candle market, identifying, especially the second, is identifying that the market is losing momentum and maybe a drop down, which identified with the second last candle. Second last candle has pushed back down. So the market came back to retest. It was trying to tag near the midpoint area. So if we think about having price actions, and we do know that price came out of areas of lows for consolidation. So when market price came back to midpoint to retest, actually came back to midpoint, retest that midpoint, broke below the midpoint, and then came back to retest the midpoint. Now it's stuck in within that zone of that midpoint. So that market could be identifying that it can push up with a bullish green candle. So it will just identify market started from the low, pushed up to a high, came back to retest the midpoint. Now it's trying to break out of the midpoint area of that zone. And then you're looking for a pattern to identify itself as we walk down the time frame. So we do know that the market did push out the zone and then lost momentum and went back into the zone. So it could identify a break and a retest that went back into that zone as we would walk down the time frame. But if that market pushes down further, it's coming from the high. So at that high area with the second and third to last candle, the market is reading as a double top. Market spiked the high once with the third to last candle, came back again with the second last candle before that market dropped with the momentum of a double top and that high, and the market broke the midpoint, came back to retest. Now, if that market is denied at this area, at that midpoint, a little bit above the midpoint, at the midpoint, and we receive a bearish red candle to follow up with the price action, the market could come down and identify a double top and a retest. Also, that market could be consolidating within that midpoint of the second last candle, see consolidation within this area until that pattern's formed. Working our way to the 6-month time frame. Price action on the 6-month time frame is reading as a bullish green candle, side by side with the second last candle. So that market is in that consolidation. So we're looking for the breakout price action towards the second last candle. So let's say market price was working its way up further. Where will it be headed? So if price action pushes up, we're looking for price to engulf at least the second to last candle body. So we're looking for the break and retest off that area nearing the numbers of 226.38. If you see market comes down, it could tag that support of 124.03. But until that market breaks out this area, everything within this price and second last candle, primarily second, is consolidation until that's pattern formed for the break up to the top side, break down to the bottom side. And the market is reading from the high when it dropped down We have a double top in this area. Market pushed down that second to last candle. So it's a double top in this area. Market pushed down second to last candle, came back to retest, and then pushed down. The market spiked back up in that consolidation area as it currently is. So we look for that pattern to form. Working our way to the 3-month time frame. So price action 3-month time frame look the same. So price action within the second last candle. So we are still in that consolidation, waiting for that market to push out the zone, push below the zone, or just consolidate back and forth until that market is fully broken. So we did identify a double top as we walk down a 3-month time frame, kind of looking like a triple top or a head and shoulders pattern. Let's talk about it. So when that market did reach that high of that overall structure, it did spike up to a high to the left hand side and then did a retest. So we can see that left shoulder. Okay, we have a head and we have a right shoulder for a retest. Market came down from a double top and a retest, as we can see, for that first, second, third, fourth retest. Market pushed down, or you can read it as 1 spike up, 2 spike up, 3 spike ups, which identify as a triple top to that high area overall. Working our way down to the monthly time frame. So price action monthly time frame reading as a bearish red doji, bearish red spike down to a low. Doji style candle weak, lost a lot of momentum to the downside, but it also, this candle is identifying it could be tagging the area of support to be respecting that area. That means it can follow up with a bullish green candle and work its way back up. And if so, that market is working its way for that incline if we receive the break of the zone. So we look for the break and a retest, which was identified for the first, second, third. So price action will be a spike in that zone, follow up with a bullish green candle. You see the W formation. Now, if not, then that market would not make it through the zone or past that SR line that we identified at 226.38, be denied and drop down for another retest towards that low, which will be, once again, this is that same area as we identified earlier for that consolidation. So consolidation, as we see on the monthly time frame, consolidation is not just within that zone, it's a little bit above the zone and a little bit below the zone. Working our way down to the weekly time frame. Price action time frame reading as a bullish green candle, spike up to the high of that area. So the way we'll break down this chart is just break it down within that area. We see the price action, we see the price action high, we see that low. So we see that market is in that midpoint. So if we have that midpoint in that area, that means as we walk down the time frame, we're going to put a midpoint within that zone midpoint. And that means this area here we're looking for. We do know that market pushed up, lost momentum, came back down, but it could be reading as a break and retest if it follows up with the bullish green candle. That's what we're looking for near this midpoint line of that zone as we walk down the time frame. Working our way down to the daily time frame. Price action reading as a retest. So we have that retest formed from that double bottom. So we have that first, second, third overall. Market spiked up and pushed out. This is the retest. Now we're going to see if that market's going to follow up with another candle, or maybe this candle may reverse and push up for that double bottom, and you'll see that double bottom in a retest. But so far, market just hanging out at this area here. So we're waiting for the breakout, at least to the price action candle body, to push that market back up. So we're looking for price to head out of the areas of 197, price of 197.63. Headed down to the 4-hour time frame. Price action 4-hour time frame. Huge bearish red candle spike up to the high, identifying that market can be dropping, and it is dropping. So we don't know how far it's going to drop. It can tag. It could create some momentum off that support and work its way back up, unless we see that market breaks the area and we see a retest and the market comes down further. But so far, that market, we will read it as consolidation until that market decides if it's going to break out or break back down, or just consolidate to the patterns formed. Headed down to 3, same bearish red candle. Market is identifying the break, could be coming back for a full retest to push up further until that market pushes down to where it want to go and pull up with bullish green candles. We'll see what patterns being formed. Okay guys, this is Cam Jones, FX, TSLA, stock.